Stamp duty land tax 2021. What things do you need to consider to make sure you do not overpay stamp duty this year? Check out this video as Louise and I will go through all of those details.
Hello, I'm Louise Misiewicz.
And hi, I'm Simon Misiewicz and we're from Optimise Accountants. And as the video suggested, we are going to be talking about stamp duty land tax, which is the tax that you pay when purchasing a property. Now, there are two types of stamp duty land tax that you need to think about. The first one is residential property and the second is non-residential property. And we are going to go through all those details. So if it feels a little bit woolly and vague at this point in time, don't worry. We are going to go and answer those questions for you. But over to you, Louise. What is a residential property and what things do people need to consider?
Okay, so those properties caught under residential stamp duty land tax are pretty much what you'd expect when the phrase is residential. So they are properties which are residences. In other words, they are dwellings, somewhere that you or I or Simon could live in. So when you're thinking about residential stamp duty land tax, look at what the property is being used for, and if it's a home, well, it's going to be caught most likely by this tax. But more on some of those occasions when it won't be caught by this tax will be coming to you, and Simon will share those in a couple of minutes. The good news with residential stamp duty land tax is that Rishi Sunak brought in some fantastic savings only last year because of COVID, and you can still take advantage of those savings right now. Up until the end of June, the 30th of June 2021, if you buy a residential property, there's a very strong chance you're unlikely to pay lots of, if any, stamp duty land tax at all. And it really depends upon the price that you're paying for your property. So if you're buying a property at less than £500,000, right now, stamp duty land tax on that property will be a big fat zero, which is fantastic news. The threshold, however, for non-residential properties is just £150,000. So right now, you're going to pay an awful lot less stamp duty land tax on a residential property, most likely, than you would if it was non-residential. Those rules do change though, because between the 1st of July 2021 and the 30th of September 2021, then unfortunately, if your property is worth more than £250,000, and this is a residential property, you will start to pay stamp duty land tax. The good news though is that if it's worth £250,000 or less, again, no residential stamp duty land tax. But yet again, non-residential remains to kick in once you trigger £150,000 of purchase price. Those rules again change from the 1st of October 2021, and at that point, I'm afraid, we'll now be paying stamp duty land tax on any residential property purchases above £125,000. And of course, this is the point where it becomes cheaper to buy a non-residential property because, of course, stamp duty land tax doesn't kick in until £150,000.
The one thing I would say about that is that the links will be appearing above our heads right now, so you can click on those after you've watched this video, of course, and below the video description. So make sure you go and check those websites out from HMRC. Louise, you mentioned about the residential rates. Obviously, Rishi Sunak, £500,000, very generous, not paying any SDLT. However, there are two elements of stamp duty land tax we still need to worry about. There's the 3% and there's the 2% foreign charge. What are those?
So 3% is often referred to as the higher rate stamp duty land tax. And this really affects people buying either their first or subsequent property, residential that is, in a limited company. And it also affects people buying their second or more property in their personal name. So unfortunately, there is a 3% rate, and that's likely to kick in right from zero. So on literally everything you pay for the property, assuming the property you're buying is worth more than £40,000. The 2% rate literally started on the 1st of April 2021, and this affects people who are considered non-resident here in the UK. So you could find yourself on the end of a 5% stamp duty land tax bill, even though the property you're buying falls inside the Rishi Sunak allowance.
So you do really need to be careful when you're thinking about stamp duty land tax and how much you are going to be paying. It's worth double checking everything that your solicitor tells you, because there's so many tax laws around at the minute that conveyancing solicitors, in my opinion, are not keeping on top of, and it can cost you dearly. I'm going to talk to you about non-residential properties now and what they are. Now, you'll see on the screen I talk about mixed use properties, and I've got non-residential or commercial properties. Now, one of the dangerous things that I'm seeing, Louise, is people are buying a residential property and it's got a office above it, and then the solicitor will charge them at residential rates, which can be very costly, bearing in mind that you've got this 3%. And just to add on to Louise's point, that the 3% and the 2% is for residential only. So if you're buying a non-residential or mixed use property, so again, a residential unit at the bottom, and above it you might have an office, or flip it the other way around, you might have a shop below and a home at the top. That is non-residential, and therefore you might pay more banded rate SDLT, but you're going to save, aren't you, on the 3% and the 2%?
Absolutely, and it can make a huge difference when you're looking at this.
Huge, yeah, absolutely fantastic. And commercial properties, right now, many people are looking to buy offices which then may be converted into residential property. And there's a huge sway of VAT concessions that you can take advantage of. That's too much for this video right now, but what you do need to bear in mind is that the SDLT rates are very, very beneficial if you're buying an expensive non-residential property. That is coming up on the screen now. So you can see that if you're buying a property above £150,000, yes, you'll be paying SDLT, but you're paying a very small amount, to be fair, compared to residential property, especially after the Rishi Sunak concessions have all gone. You've got the 3% SDLT and then the 2% foreign surcharge as well. Buying residential properties may be a lot more money than buying non-residential property and then converting it, like I said, from office to home.
So often you need to think about the aspects of stamp duty land tax that you've got to really be careful on and watch out for, because your conveyancing solicitor may not understand the detail. There are, on the HMRC website alone, at least 2 different calculators to assist in understanding what the stamp duty land tax is that needs paying. But beware. Sometimes solicitors and others may use those particular calculators incorrectly, because the fundamental understanding of what residential and what non-residential are misunderstood, and the wrong calculation can be created. And if you're not on top of this, you may be none the wiser and pay far too much stamp duty land tax as a consequence. The second issue is that, of course, we need to think about the type of property you're buying. As Simon only just said, a property that to everyone else looks like a residential unit might actually be non-residential stamp duty land tax because of its mixed use, the shop on the ground floor, the flat above. There's also other pieces of case law that recently came to light that showed that a property which is uninhabitable but is a home can also benefit from non-residential stamp duty land tax. And you may wish to go out and check out the Bewley's case, which brought this beautifully to light. So there are certainly 2 areas you need to be careful of, because if you don't do the correct research and have the right people help you, you may find you're paying just far too much stamp duty land tax.
And as you mentioned, you talked about state of property. One of the key advantages of a property that's uninhabitable right now, especially if it's been empty for a period of time, there are plenty of other tax advantages as well, namely VAT, which may be reduced from 20% down to 5%. again, do speak to your property tax specialist about that. And finally, we've got chattels. So what is a chattel, Louise? What's right in front of us? There's a chattel. What is it?
Well, the chattels are basically items that are removable from the property. They're not fixed in the building. So things like tables, chairs, furniture, maybe even some furnishings such as curtains and carpets, they're classified as chattels. And you don't pay stamp duty land tax on chattels, do you, Simon?
You don't. And the best way to look at this is if you're buying a property for £100,000, keeping numbers really simple here, but then you go into the property with the seller and you say to them, okay, so how long have you had these carpets for? How much did it cost you? And they will give you some numbers. And they will go around the property and you say, well, are you leaving this furniture behind? And thinking, well, yes, I was going to skip it, but I can keep it in the property if you would like it. And to be fair, it's your treasure, because you can say, yes, I'll buy that. I won't give you any more money for it, but I will certainly put that on my stamp duty to land tax form, because it will help me reduce stamp duty to land tax, because that tax is based on bricks and mortar only. So you need to go around with the seller and say, hey, on each one of these kind of items that you're leaving behind, please list it, please give a value and give it to your solicitor. They will put it on the form, and then make sure that your solicitor does their job by calculating SDLT on the bricks and mortar less the values of those items that you've agreed with your seller.
So back to the point Simon made about chattels. If you're not calculating it separately, you're throwing money away. And that's really something you cannot be affording to do on something as expensive as a residential property purchase.
I mean, just give that some light here. We helped one particular client, who we can't obviously mention in this video, but we got back about £35,000, was it, on one particular transaction. I can't remember the exact details of why the solicitor messed up, but they did, and we had to really counter that. One thing that I would say, and I'm going to leave a link below, if you think that you have overpaid stamp duty land tax, we can help you recover it for you. Yes, we charge you a fee, but actually, if your solicitor has messed up and then you've paid more tax than you should have done, let us help you reclaim that SDLT.
Because the good news is, even after you've paid it, maybe even more than 1 year after you've paid it, we can help you get it back.
And finally, we do have an SDLT calculator. It costs you just £9.95, but isn't it worth double checking what your solicitor is telling you that you should be paying? Not only that, but the SDLT calculator has many ways in which you can reduce that tax liability. So make sure that you go to this link appearing above my head right now and below this video description to download your copy of the SDLT calculator. Hopefully you found this video useful. It's giving you some tips, hints of how to reduce that tax liability. Make sure you smash that like button, and if you have any questions, why not book a tax consultation with us quoting the code YouTube25. That allows you to get that discount and to get some reassurance that you're not paying too much tax. Don't forget to subscribe to this channel, and as I said, give it a good old thumbs up as well, and post your questions into the comments box so we can answer that for you. Next time, I will be talking about many other types of tax. But until then, my name is Simon Misiewicz.
And my name is Louise Misiewicz.
And we'll see you again very soon.